Well, good afternoon, everybody. Welcome to, I can't remember what step in your first deal. Just to give you quick introductions. Sean Hadley, Cross Country Mortgage, branch manager, loan officer, and I've been with the Keller Group since approximately 2005. Don and Chris, if you guys just want to introduce yourself, go for it.
Yeah, I've been with, when did I come on? 2008, 2007, I think I came on, a couple years after Sean. This is my 32nd year as a lender, so I've been around for a while.
Oh, I love that bell chimed in perfectly right there. And
Okay,
Chris,
I'll shut it off.
My name's Chris. I am loan officer on the team, but also Sean's assistant. So pretty new to the business, but helping Sean, kind of doing my own thing. Whatever you need, let me know.
Yep. So Don's primarily on the west. Well, he's all over town, but he's got an office in the Rocky River office for any of the West Siders on here. Chris and I sit out of the third floor of the Pepper Pike office, up next to the main conference room. So I see Sasha, I see Courtney and Latoya. Good to see you, Latoya and Antoine. Okay. So, all right. So what we're doing here, I got a little PowerPoint. I try and keep it under an hour, closer to 40, 45 minutes. Feel free, just, unmute yourself and ask questions if you want. Don does a better job of monitoring the chat, and we'll kind of bounce back and forth, but we got a little PowerPoint that we'll walk through here. But just to show you just a little bit, kind of some simple stuff here. Don and I, and Chris, I didn't pull Chris's webpage. We all have web pages like everybody these days, but very, very interfaces well just with the general public. There's some great calculators on here. There's, really good resources, but I'd say the most common one is the Apply Now button. It still surprised me even to this day, how many people will just, blindly jump on and start an application, even though we may not have met, let alone even spoken over the phone or done too much correspondence. But feel free to pass that along. I'm in my car with my kids, 7 o'clock at night on the way to baseball practice. I'll just mention, hey, I'll either call you first tomorrow morning, or if you want to jump on and fill in my application on my webpage, here you go. They can get through it in a matter of minutes. And I might be working on their pre-approval 9 o'clock at night. Call them first thing in the morning and might have a pre-approval letter ready for them. So it can move that quick. So just so you know that that's an option. While we're on the web pages, we jump over here. Oh, that's my dog there. It's his first day of doggy daycare. So that's not the one I was looking for. Hold on a second.
Yours is in timeout.
Yeah, he's been pretty good. I'm he's a puppy, and I just keep. The main thing I want to do is just make sure that I don't see the person walk in and cleaning up one of his messes, but so far so good. So hold on one second. News daily. Okay. What I just wanted to touch on is interest rates. I usually just, especially if there's people still jumping on here, just to kind of gauge where rates are, both now and historically speaking. So I always pull up this little grid. This is basically 3 different metrics for the 30-year fixed. So right now you'll see kind of tracking just over 3%, 3.04, 3.1, depending on where you're looking. Historically, if you look over the last 12 months, it's like, oh, geez, rates are back up over 3%. And believe me, some people have that attitude, but hopefully everybody's on here is, had a mortgage or in tune enough with where interest rates have been over the years. And, if we go just 26 months ago, 28 months ago, 5.17%, which historically speaking is still a great interest rate. So if we span this back to the last recession, rates were still consistently over 5% with the exception of a year or two here or there. If we scale it back to, 2000, we're getting back to when, probably Chris was born here, but, rates were over 8% in 2000. And then if we want to go in the way back machine, 80s, 17, 18%. So I don't think I needed to lecture anybody about interest rates and how good they are, but just thought I'd throw that in here first. So, so I'm going to have you guys somewhat minimize. So if you guys feel free, just unmute yourself and scream, do whatever you got to do, throw anything in the chat box. But our little PowerPoint here, first thing I always want to know when I'm sitting at one of these is how many slides do we have to get through? 13. And the first one's pretty much a freebie here. So just know whatever we kind of run through at the meeting here, retain as much as you can, but you don't have to memorize anything in here. Obviously, we're not going to test you on this, but the message being, we're just going to kind of sprinkle some good bits of information to be aware of. But Don, myself, Chris, you have a question, don't hesitate to reach out. We are loan officers, so our job is to help people get loans and get through the process. But in addition to that, our partnership, our relationship with Keller Williams is to be kind of your expert on site. So if Sasha, if you've got a listing and you've got 5 offers coming in and the best offer is a VA offer, and you want to know, okay, what do I need to know about that? Call Don and I or Chris, and we can kind of give you just some tips and pointers. We may have nothing to do with that particular transaction, but we can just give you some extra bullet points. You have a deal that sort of the loan officer's not calling you back, or not say we can do anything about that, but you're getting kind of mixed signals that there might be a problem. Feel free to bounce it off of us. We can maybe try and read between the lines. We know a lot of the mortgage jargon and can kind of give you some guidance on that. So I'm just going to leave these slides open here and kind of bounce through, but these slides I intentionally were taken also from my first time home buyer, and it's basically, okay, where do I start? So most common conversation, where we might be working together, and Sasha, you have the live video and your name's top of my list here. So I'm going to kind of keep referencing you here if you don't mind. But so let's say Sasha's at an open house on Sunday and meets a buyer. And that buyer is kind of just totally green, first time home buyer. First question they often ask is, where do I start? Obviously, we're biased, but most experienced realtors are going to say financing. Are you going to pay cash for the next home you buy? If the answer is no, okay, you're getting a loan. You want to get pre-approved, pre-qualified first. And, we'll get into that in a few minutes, how we define that. Which loan program is right for me? We'll touch on a little bit of those here today. How much can I afford? Those are big questions. How much money do I need? A lot of people think, oh, there's zero down. I can buy a house with no money out of pocket. Well, even if you do find a zero down program, there might be appraisal fees. There's going to be home inspection. There's earnest money. So there are conversations to be had about that. Credit can play a major role in the process. And of course, what is the process? So this is just a little bit of what we're going to touch on today. Don and Chris, feel free to chime in here. Mm-hmm. You both know me well enough to interrupt me and know that once I get going, I'll keep going. But so I usually word it this way. The first step in the loan process or in the home buying process is a pre-qualification. How I simply, summarize a pre-qualification, it's what I, a loan officer, think we can do based on what you, a home buyer, is telling me. Very informal, to some extent, somewhat unreliable, because not only can people be lying, but they could be just flat out mistaken about what their income is and where they really stand big picture wise. So a pre-qualification, it might be a 10 or 15 minute phone call or an online application where we're going to review their income history, review what type of income and how much it is. We're going to review their work history, their credit history. We're going to pull a credit report. And this is a full credit report, a tri-merge credit report with Equifax, Experian, and TransUnion. And that credit report that we pulled day one is good for 120 days. So if someone thinks they're going to buy a house in the next 4 months, there's no reason not to get pre-qualified right now, provided they think their credit and everything is in good position. So by the time a pre-qualification is over, so Sasha's going to meet somebody in an open house. They might pass my number along. Maybe Sunday or Monday, I'll get a call from the buyer, and we'll walk through this pre-qualification in 15 minutes. Very likely we'll have a very good idea of where they can stand. And the conversation might end with, hey, Mr. Smith and Mrs. Smith, great speaking with you today. So excited to be working about your first home. Right now, just to recap, it looks like you're qualified to buy a home of up to $200,000. Because you want to keep your payment closer to $1,000, we might want to keep that price point maybe $130,000, $115,000 based on where you're looking. Here's what you're going to need for a down payment. Here's what you're going to need for closing costs. Based on the neighborhood you're looking, taxes and such, here's the monthly payments and where we think you'll land.
Hey, Sean, one thing I want to add to that too. If we qualify somebody for $250,000 right now, we may want to tell them they need to be looking at houses for $225,000, just because of the market, how everything's going over.
That's a good.
I know. I think when we qualify people, we don't take them to the limit. So if we say they're $250,000, we have some wiggle room off of that even. But I think people need to be looking probably $20,000, $25,000 under what they're actually approved for, maybe. if we've maxed them out.
Yeah, that's a great point. I did a pre-approval this morning. We upped it from 350 to 375. Now he's going to look at 375 homes. And I said, you might not get a 375 home for 375. You might have to get that 350 home for 375. And, you know, we haven't had many get your first deal where the conversation starts like that. It's usually the opposite. Yep, well said. So so with that pre-qualification, we're using that as a, how that conversation ends. Oh, by the way, oh, you're going to love working with Sasha. She's just phenomenal. Best agent in our office. All these nice things. Sasha, I'm not sure how long are you newly licensed? Okay. Yeah. Well, they don't need to know that. But nonetheless, we're going to kind of reinforce that. Oh yeah, Sasha's great just because, there's a bit of a partnership here and, want to keep that momentum going. So what we'll often say is, this is a pre-qualification, very informal. Based on what you're telling me, I'm confident we can get this done at the numbers and rates we've discussed. But to formalize that, we want to do a pre-approval. We want to collect W-2s. We want to collect pay stubs. We want to collect bank statements. If they're self-employed, tax returns. If they've had bankruptcy or previous credit issues, we're going to need to get additional documentation. If they've been divorced or have support, child support or alimony, we need to get into all of that. This is the time to do it. Not Sunday afternoon when all offers are accepted or, are due by 4 o'clock. We want to get this done ahead of time. That way, we've got a pre-approval letter. Now, some buyers are apprehensive. They don't want to do a pre-approval. They don't want to commit to, cross-country mortgage. It's not a commitment on the buyer side. It's basically just give a full, thorough opinion that says, yep, this could be done. With that, they have a pre-approval letter. And the value there is, obviously, it tells you, Latoya, we'll jump back down to you here, that, hey, it's good. I'm good to start running these buyers around town. I'm good to put in an offer. Tells the buyer, hey, I can do this. And if they've gone through a pre-approval with the three of us, either of us, they're going to know their payments. They're going to know their closing costs. We're going to not get into that situation where they're under contract on a home and didn't realize, oh, the payment's $400 more than they realized because they forgot about taxes. We're going to kind of educate them in addition to doing the pre-approval. It obviously tells the seller and the listing agent that these buyers are good. They can negotiate with confidence. And what I tell buyers is, especially in this market, but a listing agent, believe it or not, is going to read that pre-approval letter. And every lender's pre-approval letter, it's a little vague. So I always offer Don, Chris as well, hey, we're more than happy to call a listing agent just to tell them, hey, this buyer is great. What I tell a buyer is, that's on a Sunday afternoon when they've got 5 offers in hand and they're going to call me and say, hey, this buyer, is pre-approved. Did you verify income and assets? Yes, we have. Credit is good for 90 days. By the way, they're great buyers. We're going to give them every sort of vote of confidence needed, both for them personally, but also with their offer to hopefully see that deal get accepted. So pre-approval, it's more than just sending in W-2s and pay stubs. There's a process behind the scenes that Chris, Don, and myself go through to kind of actually get the loan pre-approved. But every lender and every loan officer has a different way of doing this. Any buyer can go online, submit a few things, and probably get a pre-approval letter, but it won't carry much weight if it's not from a reputable lender and nothing's been validated. So you, especially as a listing agent, but also as a home buyer, agent, if you get a pre-approval letter and it's not anybody pick up the phone and call that loan officer. If they don't call you right back, well, good. At least you know what the communication is going to be like here moving forward. And if and when you do get them on the phone, vet them. What do I need to know about the buyers? Do they need help with closing costs? How quick can you close? Are you one of the lenders who won't close in less than 60 days? Or do you work for cross country where we can close in 21 days if you're qualified? Sneak that one in there. But any questions on pre-qualification and pre-approval and kind of our difference with that? Nancy Emmerman, who, if you've had the pleasure of meeting with her, you already know she's an amazing person. She'll be the first to tell you she's been doing this for 30 years and she doesn't know the difference between pre-qualification and pre-approval because she'll worry about it when it happens and she'll find out or call me or call the loan officer to find out I'm exaggerating there. She does know the difference, but she'll get a little cloudy on the terminology, as we all do, because different definitions regionally and company to company. So
I have a quick question.
Yeah.
This is Courtney. Since you guys don't charge a fee for either or, should the buyer just go straight to getting pre-approved through you guys?
Yeah. I mean, there's really the pre-qualification usually happens if it's a phone. Like the example of, hey, I'm at my kid's baseball game and they fill out an application online. I encourage them on that phone call, even though it's not mandated. You know what? When you're filling that out, it's going to say, do you want to upload your pay stubs and W-2s? Yes.
Okay.
Here they are. So and it often happens where I have a pre-approval letter all typed up. I don't send it out without a phone call just because, I want to make sure, there's not a typo and, they make $1,000 a month instead of $10,000 a month. So we always do a little bit of vetting, but yes, 100%, because that pre-approval, they can be done routinely for us same day within an hour. I mean, last Sunday I did 3 pre-approvals between 12 and 4. Not prefer to do, but I happen to be in front of my computer and 3, people in distress. So,
right.
So yeah, short answer is yes. If you're talking with a buyer, just hey, go get pre-approved is probably the shortest way to do it. And then over the phone, I'll kind of say, hey, we're almost there. Just need to get me X, Y, and Z.
Okay.
And by the way, if they're not qualified or not approved, sometimes those phone calls last just as long. Sorry, you can't buy a house. We may know that 3 minutes into the conversation, but we may spend the next 15 on getting them on the right path. Because just because they can't buy a house today doesn't mean they can't buy a house ever. And believe me, I'd love nothing more to say, hey, yeah, unfortunately, it's not going to work out with talking to you, Courtney. Unfortunately, these buyers aren't going to be able to buy today, but I gave them the tips and pointers. We're going to check back in 90 days or 6 months or whatever. So, okay, not an A buyer, but let me put them on my file to keep in touch with. Obviously it's business at some point in time.
Right. Okay. Thank you.
Yeah, Don or Chris, anything you guys want to add there?
Yeah, I was just going to add, when it comes to why we can't get somebody pre-approved right now, if it purely has to do with credit, if it's late payments, we can't fix late payments. I mean, they are what they are, and only time can heal late payments. But there's some other underlying circumstances there that maybe credit repair might help. We do have somebody that we can refer them to that can help them with credit repair that is legitimate. I'm thinking Chad Kuzner, Sean.
Yep, absolutely.
He's legitimate, he's local, and I know he's working on 3 people for me right now.
That's awesome. That's good. Yeah, and we're pretty well connected. And Love Local Cross Country is a national company. We've got 5,000 employees nationwide. We're based in Brecksville. Love partnering with local companies, and get out my soapbox here. Zillow, all these out-of-state places, trying to sop up commission and all these things. It's starting to bug me. So I love working with local. So we'll touch on. We've got an hour-long seminar for each one of these topics. We will spare you that. Just go over some of the highlights here. But conventional FHA and VA. So conventional financing, Fannie Mae, Freddie Mac, that's conventional financing. Primary residence, 5% down, 3% down for first-time home buyers. If you're an investor, it's going to be a conventional loan unless it's cash, 20, 25% down. It's the most common, streamlined type of loan process that there is. FHA stands for Federal Housing Administration. FHA was created in 1934 after the Depression. Back then, you needed 50% down to buy a house. FHA was created. We only need 3.5% down right now. And your credit does not have to be perfect. You have somebody with slightly below average credit, they could still get a house today with 3.5% down and a 2.75% interest rate. It's a phenomenal program. The costs are no higher than on the conventional loan. The rates, in most cases, are better. It's a 30-year fixed. Where the differences come in a little bit is regarding to PMI, private mortgage insurance. We'll talk about that in a few slides here. With FHA, on all these loans, you're going to have an appraisal. Sometimes we get a waiver on conventional loans, but with FHA, the appraisal is a little bit more strict. This is not something to be afraid of. Right now, if I was selling my house and I had 3 offers and the highest offer was an FHA offer, I wouldn't be afraid of it. I'm not worried about anything in my house not passing the FHA inspection. And if they did come up with something, yeah, I might be missing a handrail during on 3 steps in my front. I'd happily put in a $200 handrail to get an extra $1,000 for my house. So a lot of people freak out about FHA offers, and it's unnecessary. Even more so with VA. So VA is a 0 down loan, 0 down, no monthly PMI. Interest rates are phenomenal. On a VA transaction, the seller does have to pay a little bit more costs for a veteran, for somebody who served this country to some extent, whether it's reserves or full-on military. And we've seen everything. I've done VA loans for people just in reserves for a couple of years who've serviced active duty. I've done it for, I had one of the most stressful, I can't remember, 4 stars. Don probably knows this, on the collar. It was like a colonel. It was like, I was afraid to do anything. I was saying yes or no, sir. Like I just went back through boot camp. But you see, all walks of life, it's a great niche. Like I said, the costs are a little bit more to the seller. You might be talking $500 and you have to do a pest inspection. And the VA appraiser is still going to be, a little picky. But in this market, every seller's got their house, done up for the most part. So there shouldn't be major concerns. But this is the perfect one. You got an offer on a house that you're listing, or you have a VA buyer. We'll chat in a little bit more detail, especially if this is one of your first deals, just to kind of coach you up. But don't be afraid of VA or FHA. Don, I know you got something to say about that.
I'm actually going to remain silent.
Okay. Yeah. So it's in this market where it's so competitive, obviously everyone's always looking to that cash offer first. Then they're looking at conventional, and it's so frustrating to have perfectly good FHA and especially VA buyers who, just because of Susie around the house had a deal fall through because the VA didn't like their roof. Well, you know what? Conventional might not like their roof either. A bad roof is a bad roof no matter what type of loan. So just my 2 cents there. There's other programs, USDA, which is another zero down program that's buying, more rural areas. I can never get that word right. Rural areas. There's income limits. There's some, property requirements for that. But also, if you're looking at condos, just to go back on this, if you're looking at condos, FHA and VA a little tricky. To buy a condo with an FHA or VA loan, it has to be on an approved list. The approved list is very, very short. So if you have a buyer looking at condos, that's definitely a conversation to be had. So any questions? No? Okay. So how much can I afford? Again, this is a buyer asking the question. Ultimately a buyer wants to know how big of a house, how much of a house they can buy, and what's the dollar amount showing on that pre-approval letter. Here's the secret. What we as loan officers are doing, we're really pre-approving somebody for a monthly payment, and that's what translates into a sale price. Just walking through some real soft, easy numbers here. You take somebody who makes $48,000 a year as a full-time nurse or accountant. That's $4,000 a month. Actually, let me just run this up real quick for you guys. You guys see my screen here, right?
Mm-hmm.
Okay. Making sure it wasn't just my face here the whole time. Okay. So quick, easy pre-qualification. You have somebody who makes $48,000 a year. We're looking at the monthly amount. So that's $4,000 a month. And let's say they qualify for a 45% debt to income ratio. You'll keep hearing DTI, debt to income ratio, if you really get somebody trying to qualify at their max. It could be higher, but just using this. So $1,800, that's what we want their total maximum debt to, not to exceed. So let's say they have a car payment of $350. Let's say they have credit cards of $100, and let's say they have $250 in student loans. $1,100 is what's left over. That's how much we might be getting them pre-approved for. So how much of a house does that buy? So back over here, $1,100 is how much I can afford. So our job is to say, okay, well, what will $1,100 buy you? Well, if you're looking for a single family home in Burton, Ohio, where the taxes might be $200 a month, we might say, okay, and you might be putting minimum down, that might be a $165,000 house. If you're looking at a condo in Cleveland Heights that has a $200 HOA fee and taxes of about $450, they may only qualify for about a $100,000 house, maybe even a little bit lower. So this is where there's a lot of back and forth. This is why you can't just pre-approve anybody without finding out, okay, are you looking at condos, duplexes, single family homes? Are you looking in Shaker Heights? Are you looking in Willoughby? These are all big, big variables that impact how much you qualify for. So when we say, hey, here's your pre-approval letter, it's $160,000. By the way, that's based on a single family home with taxes not to exceed $5,000 a year. And that's where there's a lot of dialogue. When you're working with a loan officer who's a perfect stranger, you may not get all those details. Hopefully, we're going to be having good communication and you'll get that from us all the way through. So mortgage payment, the principal and interest, obviously the repayment of the loan, property taxes, which range, as most people I'm sure know in here, can be big difference from city to city, house to house. Insurance, you've got two kinds of insurance, homeowners insurance, and then you have PMI. And then if you have a condo or even just a standalone home, there might be an HOA fee. Some HOA fees are $8 or $12 a month. Some are $1,000 or $1,100. Go drive up and down Van Aken and look at some of those listings. It's very common. So anybody have any questions on that? No? Okay. What is PMI? Private mortgage insurance. My favorite class to teach is my PMI class because you'll go out of it thinking, oh my God, PMI is great. I wouldn't have any business. How can I get PMI? Might not be that exciting, but it's a good thing because if not for PMI, ask anybody who was licensed between 2010 and 2012 when PMI was gone, except on FHA loans. So you either had to have 20% down or you had to go FHA. So PMI is good, gets everyone a better interest rate, allows you to go as low as 5 or 3% down for first-time home buyers. And it's, PMI is not that expensive for most people. Quick conversation. I had somebody who was planning on putting 20% down. Surprise, surprise, they had to go like $20,000 above the list price, and they only had about 18% down. And they weren't in tears about PMI, but you would have thought, it was just ugly. They were getting very emotional about PMI. We ran it through. It was $22 a month. You just paid $20,000 more for the house. That pushed up your payment $80, and you're worried about PMI costing you a whole $22. You know what they ended up doing? I don't even want to put the 18% down. Now that I know how cheap PMI is, let me just back it down to 15% down. Now you got extra money in their back pocket. So just so you know, PMI is not the end of the world. And for a more one-on-one kind of talk on this, we can chat about it, but I get into a bit more detail with any buyer, depending on what loan program they're going with, how the PMI works. PMI is not permanent on a conventional loan. On an FHA loan, if you're putting less than 10% down, you do have PMI for the life of the loans. It's one of the downsides to FHA. And they also have an upfront portion of PMI as well, but we'll save that for the FHA or the PMI class. But any questions on that? No? Okay. How can I increase my purchase power? So let's say we have that pre-qualification or pre-approval, and someone's only qualified at 150, but the house of their dreams is at 170, or their 150 house, they have to get to 170. How can we do that? Well, depending on what stage we're at in the process, we can strategize with them a little bit. And I've been doing this for 20 plus years. Nobody is better at sort of pretending like they're a financial planner and just sort of than Don. Don will be the first to say, hey, you know what? That's a great option you're going with, but what if you did this, this, and this? What if you took a little bit money down, paid off that credit card? Wouldn't that, taking $5,000 off your down payment might raise your payment $25, but paying off a $5,000 credit card, that's going to be the weight of the world off their shoulders. Mm-hmm. So we're looking at all their finances. We're always happy to, this is the difference between, your internet loan officer or your, I forgot the name of that company, but they have an arena downtown named after them, where they're just going to take an order and run with it. And without, hopefully nobody has any ties to anyone on it. But anyway, we're going to look past just what's on the easy answer, what's on the surface there, and try and strategize to come up with what's the best way, what's the best financial, not tell them, hey, here's what you should do, but say, hey, here's option A, here's option B, here's option C. Sure, they might have to stress out making decisions, but it's always better than just going with that vanilla flavor. The example, quick one I'll give. Had a guy, he just took a new job. Long term, it's a better decision for him, but he just took a pay cut from 70 to 54,000. He was buying a house for 200 or wanted to buy a house for 200. Because of his low pay, we can only do 160. Of course, guess what? They found a house for 200. You know what we're doing? Instead of him putting 20% down, he's putting 10% down. How's that working? He's taking the other 10%, paying down his car loan. He's got a $474 car payment. If that car, it's a loan and not a lease. If we get that balance under $4,700, we don't have to count that as a debt. He now qualifies. They're getting the house they want. He's got the job he wants with the long-term up gain, and his car is going to be paid off in less than 10 months now. He couldn't be happier. Especially his wife We've been working with this couple for probably 6 months, so it's exciting just to see where we're at.
Sean, there's a good example right there, how we coach people on how to use their funds better. He's going to be eliminating a $470 payment. And that extra, how much was the price of the house?
200.
So that's an extra $20,000 he's got to work with. That's $100 on the mortgage payment or less. So he's picking up $370 cash flow essentially. So there's how we get into the whole consulting part, how to use your money better.
And you think this agent's happy? 6 months, finally find a house, and they're $40,000 short. So yeah, this worked out real well. Cool. How much money do I need? So in every transaction, well, I should say most transactions are going to be a down payment. There are a few zero down programs, and there are some grant programs and down payment assistance, but down payment's obviously the big one. Closing costs. Hey, you're buying a house of X $150,000. We're going to kind of give them a little bit the budget for it. So your closing costs probably going to be $4,500, $5,000. Could be a little bit more, could be a little bit less, but we're going to give them kind of a feel so they know what to come up with. Oh, by the way, you can't ask the seller to pay closing costs. There's limitations, but that you can absolutely do that. In this market, it's definitely a lot harder, but still can do it. Prepaid expenses. This is things like homeowners insurance, property taxes. So, we usually bundle those together when we're telling a buyer what to plan for out of pocket. But yeah, figure, on a $100,000 house, you're looking a little north of $4,500. On a $300,000 house, you're getting upwards of $6,000, maybe a little bit higher for closing costs and prepaids. So keep that in mind. And then reserves. Reserves are required for some programs or helpful for others. So reserves are, okay, you've got enough money in the bank for the down payment, for closing costs, for prepaids. Is that everything? Are we tapping you out? Okay, great. Now at least we know. Oh, you've got an extra $20,000 in your retirement. You may not plan on using that, but Mr. or Mrs. Buyer, that's going to make you look like a much more solid buyer. Your marginal credit, we're going to let it go. We'll be fine with it. Oh, you want to get an extra $20,000 on your sale price? We don't need you to spend that $20,000. Just let us know you have it. That could be enough to allow us to go a little bit higher on the debt ratio. So that's why we ask all the questions. Credit. So again, we got a whole seminar. We had a 2-hour CE on credit, and I tell you, it's not even long enough for as much as we can cover in the questions that we ask. But what we're looking on the credit report, the credit score is the first thing we're going to see. Late payments, bankruptcy, foreclosure, collections, these are all red flags. They're not roadblocks necessarily, but depending on what they are, how many they've had, and when they've happened, that's going to gauge if we can move forward, and if we can't, how soon until we can. So, I mean, if you add it up, I mean, I started doing the math on a calculator and I stopped before I gave myself a heart attack. But how many credit reports we pull a day, 5-7 days a week for the past 20? I've seen well over 10,000 credit reports, which means Don's probably seen 1.3 million. I don't want to say we've seen it all because I'll never say that, but we've seen just about everything. I've seen a 846 credit score and I've seen a 364 credit score and everything in between. So yeah, we can counsel that. Shouldn't use the word counsel. We can consult them. We can give them tips and pointers. And if it gets to a certain point, happy to refer. Chad Kuzner's our kind of go-to company at CCR 760, CR 760. They do a great job. It's for a fee and all that, but there's proven results from it. So and there's a flyer I can, if you all want to shoot me a quick email, Don, if you don't mind putting in the our email addresses, if you shoot any of us an email, we could shoot you a little flyer just with some good bullet points like, hey, you got to wait 2 years after a bankruptcy or FHA. Hey, you can ask the seller for a seller credit of X amount. If you shoot us an email, I can send you this PowerPoint along with that kind of like handy dandy little flyer to kind of keep in your back pocket. So, any questions? No?
Yes, I have another question. If it's a married couple, how do you, I guess, are you like averaging the credit scores, or how do you go about all of that?
Good question. So whether they're married or not, it's the same thing. So if borrower A and borrower B are on the application together, so each of them are going to have 3 credit scores. So let's say borrower B, let's say they're married and the wife has a 750 credit score and that's her middle score, and the husband has a 690 credit score and that's his middle credit score. If they're both on the loan together, 690 is a score that we would be using to, base their approval on, their credit score, the interest rate, the PMI. And a lot of times we do look at that and say, hey, yeah, you know what? Husband, as is often the case, is dragging down the couple here. We'll look at it and say, okay, well, you know what? You guys qualify together for a $250,000 house. If we take the husband off, you qualify for a 175 house. Oh, you're looking for a 150? Great. We can do it either way. If you want to save a few bucks and put the loan into the wife's name only, we can go that route. Or if you're looking at 200 or 250, we may have to go with both of you. But that's kind of the nice thing. We can look at it both ways.
Okay.
And the thing is too, the reason you could have 10 borrowers on a loan, lowest middle score of all borrowers. And Sean mentioned there's three credit scores. That's Equifax, TransUnion, and Experian. Those are the reporting bureaus that we pull from. So again, lowest middle score of all borrowers on the loan.
And credit inquiries. When I started in this business, I used to call people and say, hey, you want to know what your credit score is? And you know what they would say? What's a credit score? Now, everybody knows their credit score, and whatever score I tell them, I'm wrong because their Discover card or Credit Karma says something different. So here's the thing with credit scores. There's 3 credit bureaus. Each of them have 19 different credit scores. So there's 57 credit scores out there, and not one of them are wrong. Everyone just looks at a different scale. But if you talk to 3 mortgage companies within 15 minutes of each other, you're going to get all the same scores. And credit inquiries are not the worst thing in the world. If you go to the CFPB webpage and just look up credit and credit inquiries, according to the CFPB, you have 45 days to shop for a mortgage without multiple inquiries hurting your credit score. So if you owe to Chase Bank on May 1st, Cross Country on May 7th, and Key Bank on May 10th, yes, you have 3 inquiries on your credit report, but the mortgage credit scoring system only counts that as 1. So there's your little tidbit for the day. Chris or Don, anything you guys want to add? No? Okay. So what happens next? So Sasha meets these buyers on Sunday. They get pre-approved on Monday. Tuesday, she shows them 3 houses, just like HGTV. They pick one, they get it, they're under contract. What happens next? So the thing to do is get that loan officer, whether it's one of the 3 of us or anybody else, that contract as quick as possible so we know the status. In this market, some lenders are taking 60 days to close. We are not. We're still running well under 30 days, but we want to use every day is valuable. So we want to get the process started as quick as possible. So we need the contract. We need the disclosures. We need any addendums, lead-based paints, an agency disclosure, all of that. And what I would suggest, I'm going to bring this one back because it helps a lot. Send your loan officer a copy of the MLS printout because that has the listing agent's information, the phone number, tells us if it's in an HOA, great information on there for us. So include that with your package is a nice little thing, even though I don't think that's required in your Keller checklist. But buyers under contract, they start the loan application. So how that might be is, a week from Monday, maybe they're under contract on the home. We can do the application over the phone and say, hey, here's today's interest rate. You're locked in. Takes us a couple of days. Between the 3 of us, we have some assistants as well who send the documents out to the buyer. The buyer reviews the documents, signs the documents. If we don't already have pay stubs and W-2s and such, we get those as quick as possible. Once those documents are signed, we want to order the appraisal ASAP. That's the one and only time we're going to collect any money from the customer. It'll be $450 to $500. And it could be put on credit card, and that is necessary. We need a signed contract, signed application, and the payment for the appraisal to get that appraisal going. Appraisals are taking, instead of usually 7 to 10 days, they're probably taking 10 to 14 days, and that's valuable time that we want to get right done up front. When that appraisal is in, our first phone call is to the buyer. Hey, your appraisal's in. Here's what the value is. You'll have a copy of this within the next business day. You're contacted as well. Sometimes it's email, sometimes by phone to say, hey, good news, the appraisal's in. That's an important milestone, especially in this market, to get past. So we're anxious to get that ordered and get that in and get word out as soon as it comes in. So while that appraisal's happening, the file is going from, the upfront status of, Sean, Don, and Chris into processing. The processor orders the, appraisal if it hasn't been ordered yet, the property survey, the title work, homeowners insurance. there is for my processing class, I have a 6-page checklist that the processor has to do. They get the file ready to the underwriter. The underwriter is the very nice, sweet person who always gets a bad rap, whose job it is to approve loans all day. And every now and then there might be a loan denial, but it's typically warranted. But the underwriter is the one who requires us to follow all the rules and guidelines, make sure that the buyer meets all the guidelines. It comes back and says, hey, the loan's approved. Usually the file is going to underwriting twice. Once to say, hey, yes, this loan's been approved. Get me proof of funds or updated pay statement, evidence of a homeowner's insurance. Once everything's in, the final goes to underwriting once more for the clear to close. Now your file is going to a closing department. So some closing departments take a week to prepare documents. Cross country mortgage, in the 5 years that I've been here, always is taking 24 hours. Can be rushed if needed, but 24 hours to prepare closing documents. That is way ahead of the norm in this business. So from application to closing, we typically say 35 days is a nice leisurely kind of stroll in the park. We have the ability to crunch that down. 21 days is pretty typical for us, but everyone's going to, in this market where everyone's a little backed up in the appraisal and the title world, we need everyone to move pretty quick. So I'm typically saying 30, 40 days is very, very comfortable. But if you're in a competitive situation and need to close quicker than that, we're the place to do that. So this is a checklist. Not all is applicable for every borrower, but this is more or less what we request of a customer. Obviously, if they don't have a divorce decree or child support, we don't need some of these things, but this is kind of just what we share with a customer. And this is after every conversation or email with a customer, we'll be sure to say, hey, here's what you need to get working on. Some buyers accumulate this in an hour or two. Some of them were begging for this 2 days before closing. So every buyer is different. So yeah, this last one, we'll skip over just to kind of jump in this real quick. So jumbo loans, if you're borrowing more than $548,000, it's a jumbo loan. A little bit different interest rates, a little bit lower debt ratios, more hoops to jump through. So it's a little bit different market, but if you're all new agents, bless you. I hope all your loans are jumbo loans. That means you're in a nice high price point. Doctor loans, if you have somebody who's a physician or a resident, doctor loans, they have a 0 down, no PMI loan program they may be eligible for. Renovation loans, Chris Case, relatively new agent, I'd say less than 2 years in the business. She had a nice little Facebook. She was in a fixer-upper home and did like a 3-minute live Facebook video about fixer-uppers in general and 203K loans. Renovation, we got a whole class for that. Those a little bit more complex, both especially for the buyer, but also for the realtor. Those take 60 to 90 days to close, but for a house that isn't moving because of condition, it's a great option. New construction loans, we have these on hold right now, probably going to roll these out soon, but if you're working with builders and new construction, we will have an option for that. So anyway, that's the presentation for the most part, but like I said, nothing in here you need to memorize or remember. I'm sure you guys are dying to know, so let's go check it out. There he is. He's the white one with brown spots in the back, just sort of hanging out. But anyway, that was more for you guys than for me. But anyway, all in all, don't feel like you have to memorize all of this. Chris, myself, Don are just a phone call away. And as Don likes to say, if you're working, that means we're working. My kids know when the phone rings at Saturday night at 6:30. It's probably nothing cool. It's probably a realtor or a buyer in distress. They're typically pretty quiet in the backseat, not always, but we kind of just roll with it. So, the nice thing here, as you can see, the three of us like to think we've got this office pretty much, handled in a sense from a service standpoint. If Don's down at the Indians game and there's a good chance I'm probably sitting at home on my couch watching on TV with my laptop in front of me, I may be able to jump in and handle the pre-approval. So yeah, just like I said, that being, if nothing else, take away just fact that our cell phones and emails are almost always going to be available. So that's mostly what I had. Any questions or anything? Anything in the chat box, Don?
Yeah, we're going to send, we want to get the flyers out, Sean.
Okay.
I put your email in there, just have everybody email you. We had a request for some general fact flyers. So We do have a flyer that just talks about FHA, VA, conventional, down payments, stuff like that. We want to put that flyer out for everybody as well.
Okay. And there's a, by the
And I
way, we
made
have a
mention
mark.
too, Sean, with our total, was it total expert? Where
Yes.
We can send an email to them and have them sign up. That way we
Yeah.
can get their information on the flyer as well.
Yeah, so we've got this great service. It is so great that me and Don are still probably trying to figure it out. The great thing is Chris, in his previous life, was on the real estate side and worked with Title Expert. So he's probably looking at this, go, you two bozos don't know how good you have it. So so we can get you into our CRM, whatever you want to call it, and send an invite out. So again, I might say, if you guys think of it, shoot Don or myself an email and we'll put you in the system and get you an invite. It's pretty self-explanatory how to set it up, putting your license number, your contact, your photo, all of that. And then you'll be able to kind of access our co-marketing library. And, I think I said somebody said, oh, we have like well over 100 flyers in there. Well, now we have hundreds of flyers in there. Everything from renovation loans to first-time homebuyer seminars to open house spreadsheets and such. So just know that exists. Also, there's something called Rate Plug. If you guys ever bump into Rate Plug, it's basically where when you send something like an MLS listing, it can import our contact information and kind of like a quick reference mortgage payment. So if you ever see something like Rate Plug on, I wonder what that is. We do have that. You can sign up for that, and there's no cost to you for it. So just in case a few buzzwords there, but. Okay, cool. So yeah, if anybody wants a copy, I'll send out this PowerPoint and that kind of general information flyer. But that's pretty much all I had for today. Don and Chris, anything you guys want to throw out there?
I have a question. If you guys have a moment, It's Latoya. Can you guys hear me?
Yep, I got you good.
Latoya. Okay, perfect. So, like, I know you went over, how to do the monthly payment for like the debt to income, and if they have the purchase price, where they're going to land. But I think one of my challenges that I've had so far working with clients is they'll come to me and they'll say, okay, this is what I've been approved at. This is the amount that I want to stay under every month. And I guess what I'm asking is, do you guys have like the calculators on your website where you can just go and plug that in? Because like you said, every house is different. So we may look at a house in Newburgh Heights, but then we may go out to like you said, Shaker, and you're looking at two different prices, two different property taxes. So if we're going back and forth with properties and my client is saying, hey, how much is my loan going to be, if I get this house? Well, I don't want to keep calling you guys up for every house, that we're considering. So how would I be able to, and I guess that's where I am. I'm like, I don't want to tell them the wrong thing. And then their loan officer is like, no, why would she tell you that? So like, where would we be able to go to if we just wanted to kind of just plug some numbers in to say you're going to be around this amount?
That's and you said it right, because we do get inundated. I had somebody come in saying, hey, today's a week. This is the weekend I'm coming in. I'm looking at 10 properties. Can you run them at 5, 10, and 20% down? And I was just sort of like, my head was going to explode. So, and a lot of times what we'll say is, as long as your payment is under X amount. So Latoya, I just pulled up on our webpage. This is kind of one place to look, and this isn't exact, but if you go to resource, I think it was calculators I just went to. Mortgage calculators. You could punch in, okay, here's a $250,000 house. Let's say I put, $25,000 down. Let's say the property tax is $6,000 a year. And let's say the homeowner's insurance is $1,200 a year. 30-year fixed. And, you could guesstimate interest rate, or usually if they're talking to me and say, okay, let's say today's rate's 3.25. All that comes out over here and it says, okay, here's your loan amount. Here's your principal and interest plus taxes. Total monthly payment, $1,580. So this is a good way to look. The only thing this doesn't have, the one flaw, it doesn't have PMI. So that's a pretty big variable, because PMI is going to be different per loan program and different for each person. But this is probably the best kind of real quick go-to. I know Satrina Young, I don't know if any of you guys know her. She's like a whiz at calculating things. Her favorite thing to do is saying, okay, Sean, these guys are putting an offer. What's the payment you come up with? And she's like $6 off. And she thinks that she could be a loan officer. And to be fair, she probably could. So this would be kind of a good guide, but just if you're going to use this site, just factor in, hey, the PMI isn't in there. And I can give you some guidance on, what to calculate that on, especially when you've got that buyer who's either going to be real or detail oriented on that, or really pushing the limit. But this is probably as good as we have right now.
Okay, thank you.
Mm-hmm. Any other questions?
Well, I have another question. If no one else, I didn't want to hog the spot. But I'm going over, different clients that I've worked with to see if it's been their lender, if this is the norm across the board. I had one client that they came with a lender, they were working with them, and then they were pre-approved. We got the pre-approval letter. We were under contract for a house, and we were probably 8 days away from closing, and the lender called because they had a question about if this homeowner would be considered a first-time home buyer.
Mm-hmm.
And of course, we've had this conversation before. Make a long story short, this guy was not a first-time home buyer because he had a property in his name that went into foreclosure like over 10 years ago. And he thought the property had sold in a sheriff's sale and was out of his name. So I guess my question is, if we were that close to closing on this property, was there any way that this lender could have, because the buyer was not, in his mind, I guess, he thought the property was well gone, over 10 years ago. Is there any way that someone could have running a credit check if the lender would have known that beforehand? Was it like this lender and I should know, maybe I should watch myself with them, or is that just something across the board that no one may not have known about?
Don, you want to answer that? I could go with that one.
I would probably state, I'd say this: there are rare occasions where that does happen, where out of nowhere in the end, and it could be even on title, something pops up that says that this person owned a property a long time ago and it went to foreclosure, just never transferred out of their name. We run something, what's it called? Data Verify?
Yep.
We have a service called Data Verify that we run that lets us know if any of that stuff has taken place. We will usually know that within the first day or 2 or 3 of the loan itself. And that's a pretty darn accurate situation. But things like that can crop up. It's very rare, especially in something in that instance where it was 10 years ago. It might have just got lost in the archives somewhere, but it does happen, can happen. But again, we run Data Verify. We know within the first day or 2 of the loan whether or not that's out there.
Yeah, and I have seen that happen. And
right.
That's one of those where it's easy to say the lender just totally dropped the ball. It is possible they may have, but we have so many safety nets in place. Hopefully
but see that story seems a little suspect because that situation has nothing to do with being a first-time home buyer.
Yeah,
it really doesn't.
You're right.
And Don, you're absolutely right, because and that's why I asked: is this something that is across the board, or is this something that I should be looking at the lender at? Because there were other things that happened in that case that things. It kind of had you looking sideways at everybody. So, but with that particular instance, I just wanted to see, because I'm like, I don't want to cancel this lender out, and it's really the buyer that's kind of not giving up the right information. But if the lender's not giving up, doing what they're supposed to do, I want to make sure I'm aware of that before I, work with them again in the future. So, but there were other things that came about that we kind of think maybe the buyer was not being very honest about their situation.
And that could be the case. On one of the forms on our loan application, there is a question that is asked: have you had any bankruptcies, foreclosures in the last 7 years? So the borrower might have known he had a foreclosure And the question is, last 7 years, his was 10 years ago. So he may have answered no,
Mhm.
which is truthful. It's just, now, if it was a property that, you know, it's 10 years ago, that puts us at darn near around the crash. There were so many things that just, when they did get foreclosed on, they were never closed off the books and never transferred out of the borrower's name and just
Yeah.
kind of written off. But unfortunately, that clock now starts ticking for that borrower if it's still in his name.
Yeah.
Exactly. And that's kind of, I guess I don't want to get in a scenario like that again, because of course the borrower was very upset. You know, they made it to that point
Right.
in the, you know, in the game and had put so much money up so far, and the loan was not going to go forward.
Right.
So I just wanted to just kind of, I guess, educate myself on, you know, if this is something that happens across the board, because it's like, that's a situation I don't like for my clients to be upset. And this guy was so upset. So I'm just learning from that situation just to make sure that if I can, you know, do anything in the future to make sure that I don't ever have a client like that, I want to make sure I know what to do.
And just sometimes there's just things we can't foresee. And this may be that one time, but it sounds like there was other issues that the borrower was not very forthcoming about either.
And the thing that's shocking is that thing is not on the credit report. There's no way for the lender to have seen that on the credit report. That's the crazy part about all. Even if that foreclosure was 3 years ago, it's probably taken off the credit report, and I have no explanation why. It's crazy. Cool.
Thank you.
No problem. And any questions like that, you know, you got a deal going south, feel free to call just to say, hey, I'm out of ideas. This loan officer, I don't know if I could bleed a word he says. Here's what happened. You know, we can, in essence, you know, try and answer questions and kind of theorize about what could have happened or if it's legitimate or not. But, you know, feel free. We're a good sounding board for these kind of things. We'll put a whole committee together like this. Zoom. So, all right, well, I'll wrap it up. We're pretty much nailed an hour. So thank you all for joining us today. And, you know, we kind of stick with the thing and bounce a little bit off topic, especially with my silly jokes and all that. But, you know, if there's anything you need, just feel free to reach out to all of us and, you know, email Don or myself, and we'll send out those items for you.